Good evening. This is the Elliott Wave update for the S&P 500 for Tuesday, February the 22nd, 2022. Another very interesting day in the market. Yesterday, during the update, right as we were getting started, there was the Russian moved its troops into the occupied territory within the Ukraine. And then we had a pretty strong reaction initially. Then as the European markets opened, there was a quantitative fund which put out a buy signal that the markets had bottomed and that it was time to buy. And our markets ran from being negative to being positive. And then as we started today, they ran up again, reaching a high at 43, let me see what it was, 43.58. And then just absolutely turned around and collapsed, going all the way back down to the daily low at 42.61. Then the President Biden came on and was giving a press conference related to the movement by the Russian troops into the Ukraine and what he felt and what was going to go on, et cetera, et cetera. And at that exact moment, that there was some fund that came in and purchased, just bought, blindly bought, and moved the NASDAQ at that time $80. And then it sank again. And it was very interesting that because the quant funds returned again and kept buying. Now, whether or not that is the correct move doesn't make any difference. What it did do to the count here in the S&P is that it provided the top for the minute wave 4, which I was looking for, and then started the fifth wave down, the minute fifth wave. And as best as I can see thus far, it would appear that we have, there's our 4, and then that's 1 of 5, 2 of 5, and now we're going to drop down again, although they tried to buy it back up right at the end of the day. So who knows? But this is how I'm going to be counting it and how I am looking at the market. I have no reason to assume that a buy signal is correct or incorrect. Everyone, is running an algorithm. They run their programs, and that's what their program was telling them at this time. Now, again, you're going to be hearing from probably a lot of them saying, well, we're in it for the long haul. We're in it for the next 3 years or 5 years or whatever their program is telling them. And so it was a low point in the market at 42.50 that triggered all of this. Now, I had heard that a lot of those quant programs and were looking for 4,200. So why they fell 42.50, who knows? In any case, the count remains the same in that I continue to look for the S&P to move lower and to complete this pattern. First off, to complete the minute 5. And actually it lines up right here down to here. And I'll show you that. I can put those in now. And we'd be going from the top of 2 to the bottom of 3 to the top of 4. And as you can see, we line up here at 42.12. And then we line up again, 41.24 kind of comes in, and that's down to that 41.17 number. So we kind of double all the way down So 42.17 down to 12, 41.92 down to 85, 73 down to 65, and 24 down to 17. So we get a zone all the way down to complete the minute fifth wave, and then in turn, the minor third wave. And once that's done, I am going to be expecting an additional minor fourth wave. And that minor fourth wave should again be larger than what we've seen in our fourth waves, because they've been of the minute level or less, the sub-minute level. And so this would be a more sustainable. Now, is this, and quite often, just to kind of give you a little bit of background here with Elliott, fourth waves often are what I can always refer to as the early bird special. There are many traders, there are many algorithms that would feel that that is a low, and they jump back in and they buy it just in time for the fifth wave to come slamming down and then make a new low. And then again, we see that surge of the buying come back in. So I will be looking for a rally similar to this, an ABC rally, but on this degree. So it likely is going to look more like this than it is in terms of size. So first things first, we need to finish this fifth wave. The fifth wave definitely needs to come down below 4250. And as we were just showing, we have that first support at the 618 level, and that's 4217 down to 4214. So that's our first zone. The second is 4185 to 4165, and then we have a little bit underneath all that, 74, and then I believe it was 58. And then we have that 4117. And it's the 4117, so it's a good 100 from there that I feel is, and then the 100% was sitting right below all of this at 4112. So that is more likely the zone that I would be looking for. And again, Elliott does not base any of that intraday movement or any of the other movement on fundamentals or news or geopolitical situations or what's going on over in the Ukraine. Those all partake, but they are not the reason. And so the reason is that we had reached a high and we began to correct. Now, what pushes and causes that correction, that is just kind of unfolds all on its own. Because on the back of all of this, we continue to have more fundamental reasons, or just a particular reason, and that is interest rates. And that focus is going to shift very quickly as the 1st of March rolls around next week. And so once that begins, everything, I believe, will start to switch and change a little bit as that focus returns. Right now, we saw yesterday and also some on Friday, a move which a lot of people call, the flight to safety, where people were moving money and putting it into the bond market. That is just a reaction that has been noted and seen each time the market is getting ready to sell off or just starts to sell off, and everybody moves their money over there to interest rates because they're going to get some type of a return. Now, I don't think that would be the smartest move as we confront hikes in interest rates. And the big question is, will it be half a point, or will it be 3/4 of a point, or will it be a full point? So I don't think that moving into the bonds would be the right choice, at least not for me. In any case, we continue to look for another downswing. In fact, if this was the 1 and the 2, then I'd be looking for it to come down, start to break, first of all, below the 4250. We got close today. And then break below 42.17 actually. Now, yes, 42.14, that could complete it. But if we take it from just how it is unfolding, that was likely just going to be wave 3, we get a 4, and then we get a 5. And so my guess is into here with the possibility of it to here, depending on how and what comes in overnight and what other markets do and interpreting what we're doing. So I can say with certainty that pullbacks are going to be shallow because yesterday and then again today, we saw that they weren't. They came in and they bought and they were not stopping. They just kept pushing in, and pushing in. Now, whether today took care of it, then maybe we won't see it as with that much strength tomorrow. If the market should break back above 43.58, it's going to begin to change the count. I will obviously figure it out, but that is not my expectations at this point. So I would think that we may get back above 43.32 in terms of this small wave 2 inside of the 5th wave is still in motion. And as we know, second waves can and do sometimes retrace nearly all of wave 1. So again, if we're looking at the, well, that didn't work. If we're looking at this as being wave 1 and this is wave 2, that could be A, B, and we're going to get a C wave up. And if even if I just did some basic retracements on here, we would see that we can go. Here's the 618. It's already been reached. 0.70 and a half has already been reached. So next step would be getting up as close as you can to 43.58. You just can't break above it. Then it's not a wave 2. So I've already seen it come back pretty strong. And so we'll wait and we'll see what's going to happen. So expectations are for it to turn and to go down, but we have to allow for a continuation and end up somewhere up in here. And then the downside should resume. And again, when it does, if the count is correct, it would be dropping again in a 3rd wave. 3 of 5, but still a 3rd wave. So I would again be looking for some acceleration. I'd be looking for it to start breaking through support and breaking below 42.61 and then again below 42.50. All right, I am going to leave it right there. I'll continue to follow the moving averages. They're very helpful. They fall into line on our smaller time frame charts. You get them all in alignment in one direction or the other. In fact, there were points today where they were all aligned to go up, and that helped to guide trades. And then they were all in alignment to go down. So both times it guided the trade and added the extra push that we would be looking for. So continue to follow the moving averages, use the Elliott, use the Fibonacci. Have a great trading day tomorrow, and the next update will be on Wednesday, the 23rd.